Hi guys, welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to talk a little bit about the US debt ceiling situation that's going on at the moment. So this one's going to be a bit more of an explaining video rather than too much analysis, but we are going to talk about the implications that it could have on the US dollar, the implications that it could have on the price of gold. So we will go into a little bit of depth there, so do stick around for that analysis. Now, around about a week ago, we had the Treasury Secretary Janet Yellen announce to Congress and the public that the US Treasury could be incapable of fulfilling all government expenditure requirements by June the 1st. And it's one of those things to note that this would be the first time in history that the US would default on its debt if it were to happen. Now, it's also important to note that it has never happened before. It's important to note that the US has always managed to avoid a default in the past. So although discussions about the debt ceiling can often be contentious, it's very much up for political debate. Lawmakers have always ultimately agreed to raise the ceiling and prevent these sort of negative consequences. So they've always come out of it. However, I want to talk about the implications if we were to see the US default on its debt. Now, there could be some really big risks to that happening. Obviously, one of the negative impacts would be on financial markets. I think a default could cause significant turmoil in global financial markets, and it could lead to the drop of stock markets. It could lead to the increase volatility and could even potentially trigger some financial crisis. We'd probably see safe havens benefit from that, so the likes of gold, which we'll talk about in a moment. We'd probably see the US dollar actually become weaker and depreciate because of that as well, because the US sort of dollar status as the world primary sort of currency could be at risk if there was a default. So the US dollar index may even fall off the back of that, which is quite interesting. But I do think that they will come to some kind of agreement on this. I don't see it really going into the fact that the US will default. So I do want to make sure I say that as I'm talking about these if whats and maybes on this situation. But it could lead to some interesting things. So I've made some notes here. So, it could lead to some higher borrowing costs. Following a default, investors would likely demand higher interest rates on the US debt to compensate for the increased risk. This could make future borrowing more expensive for the US government, and which in turn could put more pressure on the fiscal budget and potentially even lead to higher taxes or even reduced government spending, which would not be great for the US economy. Now, worst case scenario, like I said, financial crisis, economic recession, these factors all put together could combine to push the US into a recession. We've already seen the Federal Reserve talk about the potential for recession anyway, and that they seem that the likelihood of recession is coming down, or even the fact that it could be a slower recession. However, headlines like this and even defaults like this could even come into impact and affect the potential of an increase of a recession. So that's something to consider as well going forward. Now let's talk a little bit about the fun stuff. Let's talk about the technicals. Let's talk about the US dollar and gold. I'm actually going to go onto gold first, because we're seeing this little bit of a battle with gold at the moment. Now, despite the US dollar rallying, so we've talked about this in the past, dollar index rallied from the 101s, broke the 102s, and is kind of hovering above that 102 range at the moment. However, the price of gold didn't really feel too much of an impact from it in terms of some mass weakness, and I think that's because of the situation going on with the US debt ceiling and with this potential debt default. And the reason why I say that is because our investors kind of holding back a little bit from selling gold at the moment, and are they continuing to hold those longs in gold until they get some kind of decision? Because I do think that if in the first time in history it does happen, then the price of gold breaking through this 2075 will be highly likely because of the situation that the market is in. However, if they do come to some kind of conclusion here, and we do see that once again the debt ceiling is raised, then the price of gold may start to push a little bit lower. Dollar may start to recover a little bit further, and we might come back down into this 1950 handle, which is something that we've discussed in the past. If you watched our gold webinars, which we've got three more coming up this week on Wednesday, if you watch those webinars, we discussed the rejection of the 2075 and the potential for price to trade a little bit lower. So I'd be looking for price to come down into this 1950 area, which could then spark some fresh buying in gold as we kind of trade around about this range high. We could see another move up before either seeing a reversal, or if depending on how fundamentals go, we could see price break to the upside here. Now, like I said, the dollar index is going to be super important in this as well. We are trading above those 102s at the minute, and if we were to kind of hold above these 102s, then maybe a move to the 103 could be likely, or even a break towards this longer term trend line resistance. Now, typically, if we kind of take a look at some seasonal stuff in the past, the seasonals have kind of showed us that the US dollar does get stronger through the month of May, and the price of gold can often be a little bit bearish. So there is a potential for a seasonal play to happen here as well, with the US dollar potentially getting some strength from that as well. So something to consider with all those confluences there. But ultimately, technicals showing us that price is trading above key areas at the moment, so price is more likely to trade slightly higher. So hopefully that all made sense. Hopefully you had an understanding of what potentially is going on in the US at the moment with this US debt ceiling situation. Hopefully that was if you do have any questions, please drop them below. Please leave the video a thumbs up and subscribe to the YouTube channel. It really does help the channel in more ways than you know. And yeah, if you haven't subscribed, please do subscribe, and I will see you in the next video. Cheers.